Hello and welcome to recording your year-end closing entries. So the one unique thing about, and I believe it's unique, about Atom software regarding the bookkeeping is that, and I think it's a great feature, is that you don't have to do closeouts. So typical client write-up is you're closing out monthly or annually to push your income and expenses into your retained earnings. So with me, all I was doing is my bookkeeping for my tax business, and I didn't really care about reports. Obviously, I wanted to see if we were making money or not, but I didn't like having to do the closeouts every month. It was just a tedious process, and it was more work than I could see the benefits for. So um, with the way Atom is designed, it would have been really tricky to do closeouts. So I just figured, what's the point? All I do is, if I want to look at a profit and loss statement, I just put a date range in, and I'm going to get my profit and loss statement for that date range based on what was logged in as journal entries for that date range. And then I can go back as far back as I want just by putting a date range in, or I could put 2 years in or 3 years. So it actually gives you a lot of flexibility when you don't have to worry about closing out. Not to mention, if you make a mistake, now it's not that critical anymore. I can always go back to a prior month and just fix it. It doesn't make a difference. Plus, we had like 3 people working on our X-Tax bookkeeping where I was just divvying out credit card statements or bank statements, and they were logging in my expenses. It didn't matter how many people I had working on it. I could have 3 people working on the exact same month if I wanted to. As far as I know, you can't do that with your client write-up. So there's advantages, and I'm sure there's some disadvantages. But the one thing we had to do is we had to get our net profit or our net loss into our retained earnings. So all I did is, as I showed you in the last segment, we log our income and our expenses as journal entries, and then we just run a profit and loss statement based on the date range 1/1/2011 to 12/31/2011. It'll show me if I have a net profit, which hopefully I will, and then I'm just going to make a journal entry that's going to then put that net profit into my retained earnings. So it seems simple to me, and until I actually did it to see if it actually was going to work, and like I said, we tested on a full year, and everything balanced out. So I was like, wow, this is too simple just to make one journal entry as opposed to doing all these closeouts. Now my expense accounts are always going to have numbers in them for those date ranges, but I don't see a problem for that yet. So anyway, I'm going to go show you just briefly how you do that closing procedure. I already created I created a dummy account, like a closing account, just so I could balance my journal entries and push my profit into my retained earnings. So I'm going to go into 2011 check, so it'll be for the 2011 year. And as far as I know, it should be done. I mean, I'm on a calendar year, so December 11th or December 2011 is my end of my calendar year for 2011. So I'm going to go into December, and I'm going to have all my transactions in December. Now these dates actually are showing October. All I did is I changed the year, and I didn't rekey in a bunch of entries just to do the dates, but just assume that pretend that these are December dates. The key thing is down here at the bottom. This is a journal entry that you're due. So after I do all my income and expenses for the whole year, I'm going to run a report, my profit and loss statement, which we're going to cover in the next segment, how to do that. And at the end, it's going to show me, hopefully I got a profit. So in this case, I'm showing I have a $100,000 profit. I'm just going to come in and record this journal entry. So I'm going to I want to put money into my retained earnings because I had a profit. So $100,000 credit would increase my retained earnings by $100,000, and I just put my statement is to record the net profit for the year based on my profit and loss statement. And I can PDF the statement, and then I can upload it into Atom for this month. So that would be my support for this journal entry. Net income for the year closeout. I'm doing a debit, and that's pretty much just to balance this. So right here, I have a 0 balance in my journal entries, because if you read the description, I put closing out expenses and income accounts for the year to show a net profit. This is just a summary account and does not flow to the balance sheet. It is used to balance the journal entry only. And where those are right here is under capital. There's my retained earnings, and right there in the same in the capital is my net income for the year closeout. But if you actually go and look at this under admin and in transaction types, and I'm going to go to bookkeeping, my office, and I'm going to look for that journal entry or that account type under, where is it? Under capital right here, net income for the year closeout. If I scroll all the way across, you see this is blank because I said it was just a summary account, so it's actually flowing nowhere to the balance sheets, which is actually kind of nice that you can do that because you can kind of control what's flowing into your balance sheets. So this other account here called adjustment account. So say if I was off a couple dollars and you don't want to spend days or hours, weeks trying to locate this $2, but you want your accounts to balance. Well, the nice thing is you have this account called adjustment account, and I have it labeled a credit account. It could be a debit too. You could have multiple adjustment accounts, but then right over here, I don't have it flowing to anywhere in the statement, so it actually lets you balance something that you may be off a couple dollars. So, I mean, obviously you want to make sure you balance everything, but if it's just off pennies or something, instead of spending a lot of time researching it, it all depends on, the individual. But the nice thing is you can actually and it wouldn't even flow to another statement, so your statements actually would be correct. So that's how I had this. This was just set up as a summary, a dummy account kind of, just to make sure my transactions balanced, because I don't close out my expense accounts. So that's a journal entry we do at the year end. Hopefully it's always a net profit for you. If it wasn't, then it would just reverse it out and you do a debit to your retained earnings. Okay, the next segment we're going to talk about the different reports tied into the bookkeeping feature in Adam. Thank you.